Big tech IPOs have remained dormant for the last couple of years, but it looks like it could recover some as borrowing costs come down and equity markets become less volatile. Joining us right now is Adena Friedman. She is the chair and the CEO of Nasdaq. And Adena, thank you for being with us here.
Yeah, it's great to be here.
Let's talk a little bit about the IPO market, because there are some thoughts that maybe things are loosening up and maybe we're going to see a very different year.
Yeah, I think that there's the potential for that. I think that the economy continues to need to show resilience, which it has been. And I think that that's giving a lot of people more confidence on the back of the fact that inflation's coming down. So the Fed hopefully will feel like they can ease off the rate environment over the, as we go through the year. It's unclear as to when. But even the promise of that, or at least the expectation of that, I think gives investors more confidence in being able to underwrite risk. So we are seeing some really interesting companies looking to go out as early as this quarter, but a lot more in the second quarter.
Peter Orszag was here earlier this morning, and he said that he thinks the market has it wrong right now, and you're not going to see any rate cuts until at least the very end of 2024. If that's the case, do you think that would put a freeze on things?
I think I'm not really expecting it to be very early in the year, personally. I think that the Fed needs to see the inflation environments come down and stabilize, be stable at a lower level. And it's likely that the declines will diminish, so meaning it's going to get harder and harder to continue to bring it down. But if they feel like they can show that stability, then they might take one action or two actions as we go through the year, and maybe more. But I'm not thinking that it's going to happen in like the first or second quarter so much.
You've been the CEO at the Nasdaq since 2017?
Yes.
So over that period of time, you've seen a lot of different atmospheres. What are you thinking about the atmosphere right now versus what you've experienced in the past?
I would say that this is, you have to expect the unexpected. This is, I think that the environment has become extremely unpredictable, and we have to get comfortable with unpredictable, which is very difficult to do as a CEO. You want to be able to plan your future. You want to be able to plan your capital investments. And when you don't really know what the environment's going to be like, it's hard to do that. But you have to, the idea then is to build resilience, to make sure you have financial resilience, operational resilience, and then you can make bigger conviction decisions, I think.
I was going to ask you about ESG, and we were talking about DEI earlier today. This is a place where ESG has been talked about a lot. I don't know if you announced it here, but we had a conversation here years ago when you announced that any company that was going to go public on the exchange, on Nasdaq, was going to have to disclose, there was going to be a transparency around diversity on the board and the like. There is now a massive pushback on that very idea of DEI that's taking place all over the country. And by the way, it's relating also to other issues. There's a backlash against climate investments and the like as well. But what do you think of that? And how much do you hear about that now?
First of all, we actually continue to work with companies on managing their ESG requirements and reporting requirements, and that there's still a lot of demand for that. It's still a very complicated world in terms of satisfying investor interests. When it comes to the board disclosure rule, that really was investor-driven, investor demand-driven over many years, actually, of asking, can you please provide us a more standard way for us to evaluate board diversity? So we did put that rule in place. We introduced it in 2020, implemented in 2021. And our companies are complying, and it's really a very simple, straightforward disclosure rule at this point.
But what do you make of the larger sort of sea change in terms of sentiment around DEI programs in the country and pledges and quotas and all of it?
So my view is that you always have to look at how you're making decisions for the long term as the CEO. How do you create a culture that celebrates the differences, celebrates diversity, creates inclusion, so that then you go out and look for a diverse set of candidates, so that you kind of naturally raise the inclusiveness of your company and the diversity of your company. I think my personal view is you take a long-term view on it, and you make sure that those programs last through any political cycle, and you kind of focus on it over the long term, as opposed to trying to manage to a political cycle. So that's the approach we've taken at Nasdaq.
We had Julie Sweet, Accenture on, and you have the same issue. You would like to attract all the new AI companies, I'm sure, to the NASDAQ, but you need to be an AI company yourself, running the NASDAQ. It's daunting, isn't it?
Well, we now are, as you know, a pretty scaled technology provider to the industry. So
you had to do it already with security and everything else. You're in the business, and you want companies that do that to be.
That's right. Yeah. It's kind of this nice flywheel effect, right? So if we can show that we're an innovator, we can attract innovators. We also believe that innovation's absolutely critical to solving some of the biggest problems that the financial industry faces. So we have been leaning very much into AI for a long time, actually, across the markets, but also in the anti-fin crime suite that we have, and making sure that we leverage the data. If you bring data together and you carry collective action on that data, you use AI algorithms to root out specific criminal behaviors, you're going to be much more effective in solving that problem.
You let us broadcast from the Nasdaq. You give us our view. This is our view here.
It's a beautiful view, I have to say.
When we're at the Nasdaq, at your view, we have a floor-to-ceiling window of Times Square.
Yeah,
it's a
little different. It's a little different.
I think there's beauty in both.
That's the way to look at it, Joe.
I think that
it's a different. I mean,
the canyons, the canyons of Times Square.
The urban beauty. It's called urban beauty. There we go.
Has its, in all beauty, if you look closely, has flaws.
I would agree with that.
Okay,
yeah.
Good. But do you have a preference? It might be nicer here.
This is actually pretty, but it's a little chilly.
Nice.
A little chilly.